Well, it was a week of stocks bouncing between losses and gains. Good morning. My name is Tshepo Mongoai. This is Bottom Line. Well, let's make sense of the market for the week that was. The All Share Index closed the week at 108,846 points. It shaved off 1.14%. Let's zoom in some of the sector that dragged the market lower on the week. The decline was in resources that pulled back some of the major stocks. The JSE Resources 20 started the week at 105,016 points, and on Friday it finished the week at 104,719 points. Let's take a look at some of the resources stocks that contributed to the decline. Well, despite the third quarter operating update, Sibanye-Stillwater led the losses, falling 3.7% for the week. Profit taking has also contributed to the share weakness seen last week. Impala Platinum was down nearly 0.6%. Exxaro shed 1.5%, while Kunba Iron Ore also was down amid the risk of sentiment that affected the broader resources index. Well, the telecom sector was one of the main laggards that dragged the JSE lower. And let's take a look at that. Of course, the MTN group was the largest negative contributor, putting pressure on the entire sector. The stock fell nearly 5%. Investors have raised concerns over the volatile earnings from its African operations. The other stocks to watch today, of course, is MTN, of course. MTN and Vodacom are one of the main sectors that we should also watch. Of course, Vodacom share price performance mirrored the weaker telecom stocks that we saw last week. Vodacom fell 2% last week. The movement was also influenced by company-specific announcements such as the Please Call Me settlement and its trading update statement. The company will also release its financial results today. Well, for now, we turn our attention on the medium-term budget policy statement that is expected this week. And of course, in our Traders Corner this morning, we are joined virtually by Oleboheng Mphatlele. He's a trader with Lifika Securities. Oleboheng, thank you very much for joining us this morning. We've seen the absence of some internal factors moving the markets domestically. MTBPS has the potential to move the markets this week.
Good morning, Tshepo, and good morning to the viewers. Thank you very much. That's a great question. Of course, we have not seen much news moving the markets, and with the medium-term budget policy statement coming out on Wednesday, going to be delivered by our Minister of Finance, Enoch Godongwana, we're going to see the likes of fiscal policy, infrastructure, social welfare, as well as the strategies towards economic growth. So this will be an indicator to our foreign investors in terms of our bond market as well as currency movement. So if we see a positive response to the budget, medium-term budget statement, then it should be good for the rand. So we should see a stronger rand on the back of that. And also on the bond market, if yields come down, we'll also see that as a positive indicator for foreign investment.
I mean, talking about the bond market, I mean, the yields have kind of stabilized. I mean, the 10-year yields, I think it's been around 9%. How is the overall performance and given the global geopolitical uncertainty has priced into the bond markets domestically?
Correct. We have seen a lot of geopolitical uncertainty going around the world with tariffs, jitters, as well as global unrest. So in terms of war in certain aspects of the world. So we have seen a stable bond market, but as I mentioned with the medium-term budget policy statement, this could we could see yields come down if it is a positive outcome and the market likes what the Minister of Finance tells us.
There's a talk of removing the medical tax credit doing rounds. That will probably affect stocks in the health sector. What's your take on that?
Correct, Tshepo. That is also a very interesting one. because as we know, medical tax credits actually give the consumer a relief. But this is also said to target your higher income earners as opposed to your middle to low income earners. So there are concerns that the low to middle income earners will be negatively impacted, but apparently in the first rollout phases, it shouldn't be that the case. So yes, we will see the health sector being impacted most certainly, because if the tax credits get removed, then your consumer gets left with a higher taxable income, so they will end up paying more tax. So that is less money in their pockets. So the consumer should be stretched. And we know there are different contributing factors to company revenue. So it is buying their products in the store, as well as if you have a little bit more disposable income, you will tend to invest more as opposed to sitting on your cash or relying on credit. So we will see definitely these healthcare stocks being impacted.
In your view, what would be positive for the local stock market coming out of from the MTBPS?
So for the local stock market, with releases of data in the market, there tends to be a lag, because with the stock market, it's more of a longer term view. So as opposed to the currency market or the bonds that tend to adjust pretty quickly to these kind of news, this will just in the long run paint a picture of South Africa. The stock market has been rallying, it's been performing well despite the global uncertainties. So it will be an interesting take in the long run as we sit back and see what this will do in the local stock markets as well.
All right, thank you very much. Olubokeng Patlele, trader with Lifika Security, joining us virtually in our Traders Corner. Remember to join us again next week here on Morning Live. This is Bottom Live, and of course the show continues on the other side of the break.